From November 1st to November 17th, this asset is up over 660%, and statistics are indicating an upside continuation even still. Formation analysis is also suggesting an upside, and when paired with geometrics, it all makes sense. Let's pop open the charts for an edge over the coming sessions. Welcome back to the channel on this fantastic Friday. This is ARCa. Let's dive into ticker symbol STAL. What is up, you guys, and welcome back to the channel. Let's go ahead and dive in to ticker symbol STAL, and we are observing it here first in the 12-hour time frame. Quickly, before we continue on the analysis, please go ahead and I'm going to give a quick shout out here to my man Scalped. He actually brought this ticker to my attention, and I do believe there could be a continuation to the upside here and an opportunity for retail even still, right? If you're not following him, please go ahead and give him a follow, shout him out. And know that he's actually providing a lot of analysis here on ticker symbol STAL. So if you are curious about it, right? So definitely go ahead and follow the man himself. Thank you, brother. But let's go ahead and dive into what we're looking at here. Okay, team. So first of all, I'm noticing here a massive bullish formation on the 12-hour time frame, and this is a descending broadening wedge. Right, very typical, very typical formation, as it is seen a lot since November of 2021. What I will point out first is, yes, I do see an upside continuation. We have some critical areas of resistance coming up, right? But I would like to point out something very, I guess not so obvious for a lot of people, right? There is a decline in volume with an incline of price, right? So that usually indicates a potential bearish divergence when it is paired together, right? The thing is that it's showing more strength, though, which is immediately curious. So let's observe some of these resistance levels, right? So I guess in a discretionary manner, I can see, right, that this bundled up area here, right, of that looks like all support to me, right? So let me just go ahead and create a range here that we can observe as a higher probability for resistance, and it was previously used as support. Right, so let's go ahead and create a box. And then this tweezer bottom here, that indicates a pretty obvious resistance for us, right? So that's around 20 and 80, right? So now I think that this is looking okay by understanding that we do have some immediate resistance to come to, and seeing that we have some wick highs here that have a lot to do with previous supports as well. I mean, I guess it would even be this one here. So I'm going to draw one more range in here, right, that I think we would identify a chop zone, right? And that this could be a zone that we can look at for potential opportunities to long the market, right? So if that's the case, then let's see if we have historical price action back down here anywhere. Yeah, no, it's actually... It was completely in price discovery as it came down here. So I guess let me see if what I'm trying to do is actually focus the target, focus a zone here, right? In case there is a strong area or a stronger area of support than others. And I guess the only one I'm seeing is potentially right about here, which is the wick low of this candle here and the opening of this one. They're kind of combined together, and that's around 20.57. But it just, you might as well just bring that thing down there, right? So I'm going to go ahead and just leave it like this for now, right? So that's going to be 20.50 and 20.58 as a place of support, right? We can go ahead and even do this, right? We can even note it down for retail here, just in the event where you do need these targets, right? So, of course, if you are playing this formation here, per the playbook rules, this topside target, or the way to trade it is actually trade it to the genesis of the formation. That would be right up here. So the reason I have this number 1 here is because there is a tiny candle right there that broke outside of the regression, and that marks off test number 1 of the resistance, the second candle in. Now, I guess it could have been any of these too, but the one that was more notable to me was the one that was sticking outside of the regression, right? So from there, test number 2 followed here, test number 3 followed here, and of course, if you already follow me, you already know this, test number 3 is followed by a capitulation. And that being said, That was a 12-hour bearish engulfing. So huge downside after that, right? And then we face this reaccumulation period. And it looks like the asset has not actually released that much. In fact, I guess we can even observe and on balance, right? And see if this, yeah, wow. So on a 12-hour time frame, you can clearly see that the accumulation of this, or yeah, this is massive. There's literally no selling. It's all acquiring, right? So really big price action here for this asset. I understand that we do have some slight diminishing here in volume, but it's, I mean, generally speaking, these last starting from here, that's 106 million. This is 108 million, 64 million on this one here, 45 million. And then this here is 42 million. So it's a slight decline, right? So I would love to see further buying, right? But I think this is due to the fact that we're approaching resistances, right? So as you're approaching resistances, naturally you're going to get some take profits, right? But as soon as this does get a resistance, I imagine that we could be creating a very short term what could be a chop box, right? And I don't think this would last for very long, but before it actually tries to break out of it and then eventually touch its take profit, which would be conveniently set at a very psychological target being 1 cent, right? So if it does acquire that 1 cent, it would be an incredible beat for this asset, right? And now closing above the 1 cent on a daily basis would be incredible, right? So that potential resistance could be likely looked at about 0125, just 129, right about there. So if it's going to be resisting at that 129 or 125, then I would honestly, this would be the area that I would expect, but with FOMO and uncontrolled buying or panic buying, right, there could be an introduction of this tweezer top, right? So it's always a potential, right? So we can observe things like that all the time, but I'm not sure that we can get all the way up there. Of course, we have to just present it as a potential, but I would actually feel safer just saying that 129 may be the absolute high, and that paired with let's see, I think it would be safe to assume here. Right, so 121 to 129 could be that resistance before coming back down and validating the 1 cent zone, and then we shall see if there's an upside continuation. But I would like to share with you now a very interesting chart here, right? So I have ran the statistics on this, right? On the daily time frame, the criteria is volatility represented by BBWP, linear scale instead of on pain. And this combined or versing stochastic momentum. It's a stock setup. Now, what gives me a further validation would be the DMI, particularly the ADX, which is the average directional index, and that application to this criteria here is of great importance, at least to me. Right. So what I did here is I measured anytime that volatility has contracted into the into the critical zone, which is 15 within the 15 percentile of volatility, and then started an expansion phase paired with stochastic momentum's upside. Anytime that has happened throughout the entire trading history of the daily time frame, right? So these are my samples here, and this is the data set right over here, right? So I have a standard distribution here so that you know how it's just a normal curve. That's the way I usually perform the stats on this, right? So I do have further targets to look at, and in order for me to understand where this is going, I just need to see how far into the stats we have moved up, because this is massive, right? I mean, from the very bottom side of around 3 zeros and 8 to that 2 zeros and 6 2, it already knocked down a zero and went way beyond the mean there. So that's that's about a 667% move to the upside, and that's where are we going? Right? So at this pace, of course, I still see an upside continuation, although I will say that stochastic momentum is slightly curving already. It doesn't mean that it's just going to stop here, because historically speaking, we could still extend here all the way to 94.46%, and we're currently sitting at about 85.20. I'm just saying, right? I'm just saying. So, yeah, in this case, let's go ahead and go over these potentials, right? So, with that criteria that I mentioned, right, critical contraction of volatility into expansion, you are looking at a total of 10 iterations, of which 6 were guessed correctly to the upside, marking off an average upside accuracy of 60%. So now your average upside thrust based on that criteria is a massive 89.86% to the upside over the span of about 10 and a half days. Right. So now I calculated the needed standard deviation from this, where 68% of the results land. So that landed at 99.43% from the firing of the signal. If you're curious as to where the signal fired, here it is. Anytime that we dive into that critical zone and then move the volatility component, the spectrum line, upside of the 15th percentile, with the moving average also pivoted towards the upside and beyond the 15%, that is when I consider my signal fired, and that is when I start, the stat, or where I measure from. So in this case, 2 zeros and 1 2 is where I believe that the signal fired, and from there, we're currently sitting at 411.80%. Right. So if you're curious to see what that standard deviation was of 99%. So let's just go ahead and add that 99% down to here, right? Just so you can see how it follows it. So, it came up to about 2 zeros and 2 4, and this candle here closed at about 2 zeros and 2 6. So that's showing you that the statistics are playing pretty well, right? So now, to understand where this went, I had to see beyond something called the upper bounds and lower bounds of standard deviation. So I took into account the first standard deviation, upper bound and lower bound, the second standard deviation, third standard, and fourth and fifth. My goodness, I forgot. Right? So, yes, lunacy. All right. So right now, we're currently sitting at 411.80%. And if you observe here on the third standard, at the upper bound of the third standard deviation, that is a 388.16% move to the upside. So that's literally there, right? So that, and what's curious too is that the target that we're sitting on, 2 zeros and 6 2, is the 2.618 golden mean at 2 zeros and 6 1. So geometrics, statistics, and psychological targets are at play here, and this is very impressive, right? Because you don't always get that, especially with a ticker that's this small, right? We're looking at a micro cap here, and this can be easily mangled, right? So now the continuation is also what I'm curious about, right? So now taking into account the upper bound of the fourth standard deviation, 487% to the upside, I guess, this is, I know I put it at 485, but I'm sure that I can I actually? Oh my goodness, there we go. That's close enough, right? So that'll be 2 zeros and 7 1. Which is already very curious if you're not remembering the target that we just spoke of, okay? The next one would be the upper bound of the fifth standard deviation. So being these, right? So this is this would be the first standard deviation, right? Second, third, fourth, and if we had a fifth, that would be a slightly different curve, still a normal one, right? But that would be looked at in that manner, right? So now the upper bound of the fifth is 587%, and that is leading to 2 zeros and 8 3. Well, what do you know? Let's go ahead and take a look at that. So that's 2 zeros and 7, 2 zeros and 8, right? Let's go back to our chart here, and what do you know? Take a look at our discretionary resistance of 2 zeros and 7 0 and 2 zeros and 8, right? Very clearly looking at this range here of support and resistance, right? We can go into that area, resist from that point, come back and validate some areas of support that we have, right? Being these critical upsides, right? Test number 2 and test number 3 from the broadening wedge. And then we could actually start this chop around here before continuing on to the upside. Now, the topside target of 10 being 1 cent, let's go ahead and take a look at where that lands. Well, look at that in the geometrics. Let's go ahead and zoom in. Take a look at that. The 3.272 geometric is landing at 102. And the 2.272 in a shorter scale is landing at 103. So this is absolutely suggesting targets that both geometrics, statistics, and discretion or psychological targets are all in line with, right? So now let's go ahead and move on to the next and last chart, which will be the RSI chart, right? So first of all, the hourly time frame here. This is one of my divergence algorithms, right? So this is my ARC diversion one, and this displays to you potential drives of bullish divergence of both hidden and regular drives and bearish drives, right? Both of the regular and hidden variety. So in this case, we have completed and confirmed on the hourly time frame and continuing actually a very big drive of hidden bullish divergence. And I mean, the thing is here is that it's sitting in the gravitational zone of the bullish control zone and the bull strength percentile, right? So this is very critical. It is suggesting an upside even in the immediate short term. Going back to even a 30-minute here, it's still an upside suggestion. 15-minute time frame, still an upside suggestion. 10-minute up, 5-minute up, right? So now the only thing that I can rely on are historical resistances and prior supports that we're now going to use as resistance. So I guess now let's move on to so here we go. The 3-hour chart. Yeah, the 3-hour chart. That's it. That's what I'm looking for. This is the resistance. So we broke beneath the SMA 14, right? And this is the RSI signal, standard setup RSI. This is my standard RSI that I have, right? They're all my algos. So I'm looking at a continuation to the upside in the short term. We're going to pocket this resistance here to only come back down. I think we could come back down into the gravitational zone in here, right? And then bounce to the upside and continue. Seeing that we are still, the RSI is completely cooked on a lot of these time frames. It's burning hot, right? So in this case, very nice bounce off of that SMA 14 on the 6-hour time frame and suggesting a continuation to the upside. Moving on to the 12 hours, same situation, upside pivot even still, daily still with an upside pivot. But remember that the thing is that we're in these discovery percentages right there. We don't have any probabilities of pullbacks from this area since we're beyond those, right? Even I guess we can kind of see it here in the buy daily that we still would technically have a massive upside to go. We're sitting currently at about 72%, and historically speaking, this thing could jump up to 85.60 or maybe even 86. Right, so I guess the probabilities are kind of there, and this is already creating sort of a break of market structure since it is breaking upside of the previous highest iteration and or potentially creating a regression that we would need to observe as the days come in, just like this right here, right? So if that is the case, then we have to kind of eyeball a potential pullback into the percentage of about 73.32. Doesn't mean it's the end of it. It just means that there could be a regression there, and we need to observe that, right? So formation theory and regression also works in momentum, right? So keep that in mind if you are new to the trade. It is something that you can use. And now moving on to the 3-day time frame is just massive upside pivot here. This is very, 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 very erect and absolutely convincing. So in this also sitting in the gravitational zone. So any pivot you have here, 2% up, 2% down is a gravitational area. This is your the bull weakness percentile. This is bull strength. You have bear weakness, right? And bear strength here. The overall zones are bullish control zone and bearish control zone, right? And in this case, we're sitting in the in the bullish control zone, particularly in the bull weakness percentile and in its gravitational zone. This is very likely to get pulled up. And so now in the 5-day time frame, I would like to observe this in the coming days, as it looks like the immediate short-term timeframes are going to be completely responsible over what price action does, right? So just like that, right? Shorter time frame momentum cascades into the larger time frames and larger and larger and larger and so on, right? So that's how it goes. It's kind of like a wave. I know it's difficult to observe like that, but team, if you continue watching traders like Scalped, traders like me, you will understand this more and more as you observe. Right? Any questions or concerns, where to reach me, team. But yeah, I think this is a pretty good place to leave off. Please take whatever I do show and iterate within these videos as just a form of entertainment, as I cannot suggest for you to buy, sell, or hold any assets whatsoever. Never, 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 never. I need you to do your own due diligence and everything will be cool. But with that said, team, I wish you well a very, very good weekend, and I will catch you at the bell on Monday. Adios. Yeah.